Felix here. SoFi has officially beaten the mega banks. And what does that mean for your stock price, you wonder? Let me show you what we're going to talk you through here. How they did it, what it actually means for the stock price, how to trade it, how I have traded it. I'll show you my exact trade setup and explain it to you. Watch out for shorts. There is a bit of a warning in here. And then we'll round up with a free trading training. So stick around till the end. And of course, none of the following is financial advice. You already know that by now. And yes, you can already sign up for the free trading training if you are impatient. It's taking place next Tuesday. You see my entire trading strategy, and we'll do some live trading together. We might even trade SoFi. Who knows? So let's jump straight into it. There is an article out by Forbes, which puts out data from Cornerstone Advisors. And they basically studied how do consumers behave now compared to the past in terms of opening accounts and so on. And what we're seeing is a massive win for fintech startups like SoFi. So if you look at the winners and losers here, SoFi and Wells Fargo, in 2020, SoFi accounted for 1% of new account openings. Wells Fargo got 8% of the new account openings. I don't know what 8 out of 100 Americans were thinking opening accounts were filled with Wells Fargo, but they did. So in the first half of 2023, fresh data, SoFi's market share is quadrupled to 4%. 4 out of every 100 accounts, new accounts opened with SoFi. That's monstrously large. That's really, really a lot. And Wells Fargo has dropped to 3.5%. So SoFi accounts for more new accounts, to use the word accounts a lot in a sentence, than Wells Fargo, which is pretty staggering stuff. Why is that? Is it just like the really, really young people? No, not really, but there is an element to it. So Gen Zers, essentially, their primary account, the Megabank primary accounts were 35%, now it's only 27%. And with millennials, I think I'm still a millennial. Am I still a millennial? I think I'm still a millennial, apparently. So I'll blame it all on that. 41% previously were using Megabanks, you know, the Bank of America, that sort of thing. Now it's only 32%. And regional bank, community banks, credit unions are also losing. What the heck happened here? Basically customers all around. And why is that? Well, people are realizing that fintech banks just offer better products. And people who are a little bit on the younger scale of life, and apparently I'm still part of that, we pay with everything, right? Apple Pay, Venmo, PayPal, whatever. We just don't really care about the bankers. We just want it to be good. And we don't actually like mega banks because they treat us like, you know what. So what does it mean for the stock price then? That's point 2, right? So if you look at the chart here, and I've got the short stage on there, I'm just going to hide that for a moment. We get back to the second. So if you look at the stock chart, we're kind of bumping sideways, and it's neither particularly bullish nor particularly bearish, right? The bullish trade came in when we crossed that yellow 50-day moving average line here, and we exceeded the $6.50. That here was the bullish setup, basically here where my mouse is pointing. That was the bullish trade. Now we're kind of going sideways. What does it mean? Well, it's sort of like a positive hold, I'd say. So what have I done in terms of trading it? Well, I'll show you the exact trade in a second, but essentially we're trading right here. I make money if the stock goes up, and I also make money if the stock goes down to $7. So in this zone from down here, $7 all the way up, I make money. And that's really important because stock can lose $1.40 and I'm still making money, or I can go to the moon and I'm making money. So that extra buffer essentially converts this from a 50-50 trade, which is what you get when you buy the stock, or if you buy a call or something like that, to like an 80% probability trade. And I'll show you the actual trade. Here it is in Think or Swim. Here's the actual setup. It expires 25th of August, 43 days to go. We're so far making $25, but that's just because it's a very young trade. This trade makes us $7 every day simply by holding it. So if the stock price were not to move for 10 days, we just make $70. Now, it might not seem like a lot, but it is quite important because it gives us a little bit of an edge. It's a control. If you're buying a call option, for example, you're losing money every day with this thing called theta. So this is our setup, essentially. We're here, we can go all the way down here to $7, or we can go to the moon and we make money. Now, we don't have to wait to get to the moon. We can just exit somewhere here, and we probably will do that when we get to about a 10% gain, something like that. We'll exit if we do make money. Of course, that isn't financial advice. But let me run you through how you could do that right now, and then we look at the shorts as well. So you can go to optionswatch.io, which is a tool that I'm developing with a mentee of mine who's an ex-Twitter guy. He's super smart, and we're basically developing something that makes it easy for us retail people to find good trade setups. So what was the trade that we did? We did $6 and $7. So we bought a $6 put and we sold a $7 put. Now I think, yeah, that's still a reasonable setup. So what does that say to you? Well, there's a 76% chance of making money. It was about 80 when I set it up. The stock's come down a little bit. The break-even line is literally that gray line down here. So it's way below the stock price, now at $6.83. So actually premiums have gone up a little bit, which is decent. And it could make you a 20% profit. Not a bad setup. Now, am I saying should you do this? Absolutely bloody not if you don't know what options are. If you don't know what gamma risk is, if you don't know what time value is, don't do it. It's risky. Do it in a paper trading account and learn and be curious and ask questions, and come and join my live trading. I'll put the link out again at the end, felixtrans.org/webinar. But can you see why this is better than just buying the bloody thing and hoping for the best? At least if you are in it for the short term. If you've got a 10-year time horizon, who cares? Just put $1,000 at this every month for the rest of your life or whatever, and obviously spread it and diversify and so on. But, that's the setup. We're basically allowing ourselves to set up a trade significantly below the current share price. And that's what we're doing here. So what was the next point? SoFi Trade. Watch out for shorts. It's good I have a cheat list, otherwise I forget stuff. Want to withhold information from you now. So, okay, on this chart, I've got shorts data. And what can you see with the last couple of shorts? We had a lot of shorts. So when we had in March, we had about short volume of 30% here. Stock tanked, shorts won. In May, again, after earnings, we had short volume of 30%, stock tanked, short sellers won. I'm sorry to say. So what does it make me realize? Well, it makes me think, watch the short volume carefully. At the moment, it's at 26, average is 24. If it creeps towards 29, 30, I probably exit my trade, because I'm not Jesus. I don't beat Citadel. I have to realize that those guys are bigger than me, and they have a few billion more than me. Just a one or two, and therefore, we need to be aware of the stuff. So it's something to watch for sure. Now, the other thing that we can watch is you can go into your broker, and go into the options chain, and you can look at the August 18th data, and there is a column here called open interest, open INT, or might be OI if your broker is particularly cheap with lettering. And then what you want to look at is like, where's the biggest number? So the left side are call options. It tells you that at the top here too, calls. And that's your resistance line on the way up. Now we're trading at 8.30. Our resistance sits actually at $8, funnily enough, but it's creeping its way up a little bit towards 9 and 10. So, and even at 13, 12, there is now decent amount. But those $8 calls are still making money, and they're therefore likely to take profits. They take profits, they depress the share price. So watch out for those. Now on the way down, equally important, we want to look at where the support is. So the right side are our puts, and puts is downside protection. So we're looking at where is the biggest set of puts, and it's equally at 7 and 6. And you can see now maybe why I set up my trade at 6 and 7, because that's where the support line sits. There is some at 8 and 9, but the majority sits at 7 and 6. So if you go back to the stock chart, 7 is a decent support line, and that's precisely why I picked it for that. So watch out for that. And this data is free. You can just look at it, take a screenshot of it every day. You don't have to pay a fancy subscription for anything, and just see like which way is the market moving. And if the stock goes up and these levels don't move with it, it's not a good sign. It means the options market, which is a slightly smarter end of the market, don't believe the rally is going to last. So this data is free. It's available. Why not take advantage of it, right? So there we have it. All you've got to do now is go to felixtrans.org/webinar, sign up for the free trading training. I literally teach you my entire strategy, all of it, nothing held back, because you deserve financial freedom. You deserve financial education. And you might know a thing or two about options, but if you are buying call options or if you're buying leaps and you think that's the way it works, it isn't. That's not what hedge funds do. Hedge funds hedge. So I'm going to teach you how to hedge, how to set up trades that are hedged, that have limited risk, that have 80% probability of making your money, and it's going to be fun. And we do some live trading together as well. So sign up, felixfranz.org/webinar. There are only, it's on this site, isn't it? There are only 1,000 seats available. There are probably about 600 left by now. So take advantage of it before they run out. They always do. I appreciate you watching. I appreciate you subscribing to the channel if you want to stay up to date with everything that happens with SoFi from the perspective here of an old. Thanks very much for tuning in.